Welcome aboard, traders, to a new session of charting across the board. It's time for an update. In order to understand the future, it's important to understand the past. But before we begin, there's a question everyone should be asking now, and the following goes. Why do people continue to make mistakes or listen to wrong market callers despite all the evidence in the data that the markets continue to prove? Simply because the markets aren't just about data. They are about psychology, emotion, and identity. Here's why people keep falling for bad calls and repeating mistakes even when the data says otherwise. You guys know, are familiar. Cognitive biases, confirmation bias. People seek out opinions that match their own, even if they're wrong. Recency bias. A recent or correct call makes someone seem credible, even if their long-term track record is terrible. There is also an emotional need for certainty. Markets, as a whole, are uncertain and chaotic, as recently experienced across the board. Therefore, making bold predictions gives people a false sense of control. Hearing someone say, "This is going to happen next," feels comforting, even if it's fiction. Hope and desperation. Some people are emotionally or financially overexposed. Therefore, they want the call to be right because they need it to be right. That blinds them to evidence. Tribalism. Some traders latch onto personalities and turn them into heroes or even cult leaders. At that point, it's not about the markets anymore. It's about belonging. Therefore, a few good calls during a bull run and suddenly someone's a genius. But, as the saying goes, don't confuse brains with a bull market. You ever see someone clinch to a clearly wrong call because they don't want to admit they were duped? It's pride, my friends. And pride costs more than any indicator ever will. Welcome aboard, everyone. This is Marble6, your host. I wanted to touch a few data points from a true technical standpoint, as you guys are already aware, those of you who are following from years, and most recently, to those who are new, welcome aboard. Thank you for joining. This is, once again, Marble6. To start with the chart, there is some technical arguments we would like to portray in the following context, the following material, the stream. Therefore, we jump into our first chart here we're going to start with the S&P 500 and also move into Bitcoin, okay? Because I do know that Bitcoin, of course, is also the main engine that the main trading vehicle that many people trade, which is absolutely fine. I started trading Bitcoin back in 2015, 10 years ago. Therefore, my roots are within cryptocurrencies. I experienced the turbulences, right? Volatility that we are experiencing in the equities market is completely normal within the cryptocurrencies. We experience fluctuations between 70%, 80%. Therefore, our mind are already triggered to what recently occurred, which is pretty much a blink of what may occur. So therefore, let me jump into the next, or into the first chart for the S&P 500 before I move into BTC. Okay. Thank you for joining. As I said before at the initial part of the stream, in order to understand the future, it's important to understand the past. This chart that you guys can observe is a very prolonged upward traction from the lows of October of 2022. The current chart is a pattern, a multi-pattern formation known as the three pigs and a dome house, or as a friend refers, three pigs and a doll, or three pigs in a doll house. Pretty funny. But now is the time to pay attention, my friends. In order to understand once again the future, where we are now or where we were at the highs, the 61.52, 61.60, it's important to understand the past. Moving into the past, how did we get here, my friends? Starting in 2022, for those who are new, I'm recreating this chart because it is important to have context, okay? It's very important to have context. 2022, as I said before, why do many people follow or continue to follow wrong colors? Such as making a call at the bottom for a crash to then making a call at the highs where the Big Short is. The Big Short back in town? Let's see, my friends. We are experiencing so far 26% on the NASDAQ, nearly 22% on the S&P 500. Therefore, this is indeed a Big Short. So maybe he's back in town. So we need to pay attention to the footprint of the composite operator. Therefore, going back in time, 2022 lows, 2022 highs. The Big Short indeed presented himself to where to take the prices down on the S&P 500 to the levels from the lows to the highs, 51.40, and most recently the 50% retracement, a 48.30 change. Okay, I previously highlighted this as a 48.27, considering that the chart is from January the 10th, and then futures move or change to new contracts, and the data may slightly change. However, same analogy, same technical proposition is presented over and over. Therefore, from this recent move on the S&P 500, we have tested, okay, the 0.382 and the 0.50. Now, applying Fibonacci is not the same as pretending to be Fibonacci. Fibonacci is someone who applies Fibonacci in the wrong manner. Every time Pinocchio, in this case, lies, the nose goes larger. In the case of a Fibonacci application, in this case, the goalpost keeps moving. Okay? Only to make a little joke for Fibonacci technicians out there. Here we are in the price action. Jokes aside, my friend, this chart is extremely important. Okay? Why? Because we were expecting, in this case, projecting that 2022 lows were going to take us to the 61 and 62 range, all the way to potentially 6,355. The main projection, 61, 62 zone, where indeed that was the zone that we achieved back in last year in 2024, December of 2024. The first test, then a double top, another retest of the highs, creating what we are experiencing now in the price action with a severe decline, okay? Going back in order to understand the future, it's important to understand the past. All of this was already presented before. This is the step 1, Step 2, are we here, my friends? Are we now, after completing that first projection from the B to the C in the pattern in blue? This chart corresponds once again from December of 2022. Therefore, the first upward traction from the lows, 3,000 or 3,500 to 4,000 to 6,062 was accomplished. And since then, we are experiencing the first turbulences, 20% decline, where the chart from our friend comes into place. And I mean our friend George Lindsay, the creator, the author of this chart from 1962. Okay, so this is all of these are technical readings from the legends of the past that continues to repeat over and over, that we are so far, we already indeed experienced that first decline from the highs that often present as the cupola, presented as a head and shoulders. There might be some head and shoulders printed on the daily time frame, where, considering that this chart is based on the weekly, we do know that there has been indeed some head and shoulders, normally suggested by Garley as one of the true patterns that create reversal points. Either are the lows as an inverse head and shoulders, or are the highs. Very simple definition of market turning points. So therefore, we are experiencing, or we experienced already, that first decline from the highs 61, 52 to the lows of 40 or 54, I believe was before, prior to the upward traction of 5,800. Gann suggests that once a new trend is defined, we often cannot track the main top, but when there is evidence of a lower high, in this case, that a trend is shifting, we then execute positions where that was the case presented in the room at 5,800, a personal execution, my friends. None of these represent any financial advice, but rather an interpretation of technical information. From the 5,800 region, where did we go? The idea was to navigate towards the 5,300 and 51 based on the information that we presented in the room. Due to the selling pressure, we went to the 50% on the weekly, which is indeed also 4,800 region, also already within the charts, okay? From January the 10th, my friends, okay? Anyone trying to move their goalposts here at these levels before calling all-time high and then prices decline 22% should be carefully listen, my friends. Plenty of charlatans in this space, as I already mentioned before. Therefore, the bounce from 4,800 is now this bounce that we experienced today, this morning, either to 5,400 or 5,300, where that is all the data points that we are observing so far in the price action for the S&P 500. Therefore, the big question remains, my friend, are we going to experience this major decline from 54 to now a major decline? If that's the case, then our technical readings will be, or will remain, as one of the most historic charting application of the time, I would say. This already happened in Bitcoin before, and I'm not trying to give a pat in the back. This is only respecting the legends of the past, okay? With a proper technical interpretation. Therefore, step 1, and are we here now, my friends? The same pattern was presented, but once again in 2022. Now we're 3 years later. The periods of risk also mentioned from 2025 and 2026. If we are making a new high, okay, higher than 6,400, I would then change my mind that we are going to erase this chart. But if this chart respect, then we are potentially, once again, nothing is certain, my friends. Everything can change at any given moment, as Mark Douglas suggests, where we may experience the first turbulence and then new buyers may come and change the entire course of this downward pressure that we have been experiencing pretty much since early this year at the market top. So far, the top was in, no doubt, among Bitcoin and the S&P 500, at least in the short-term trend, okay? After the upward traction. Therefore, the big short was indeed presented he's back in town, giving the major decline across the board, while others were calling for all-time highs across the board. Wall Street analysts also, we know that they continue to be wrong over and over. Mike Wilson was also calling for a major decline at the lows. What happened next? 64% move. Anyways, this is where we are. This is what truly happened from a technical standpoint in the market. The fundamentals are aligning as a catalyst. Okay, this is another evidence from the highs at 6,000 to 5,100. Prior to this one, we have a 5,300. Once again, the selling pressure is what creates those overthrows within the price action. Therefore, we went to 48. Now we're trading currently potentially at 5,100 region or so. Okay, what we want to avoid, or what the bulls would like to avoid, is a chart from George Lenzi, the 3 peaks and a dome house. In this case, a doom house, because everything that's occurring now seems to be doomsday. However, we do know that how fear and euphoria are related. When there is extreme pessimism, we have potentially an argument for higher levels. When there is extreme optimism, as it was the case at the highs, we then need to start approaching the markets more carefully, as it was indeed the case. To move into the next chart, let's jump very quickly into the price action for Bitcoin. Okay, this is the arguments I do have for the S&P 500 so far, until something changes, until there is a shift in trend within market structure. So far, we have broken the previous higher lows, significant higher lows, my friends, significant higher lows from September and then April of last year. We created a new low, 5,500, bounced to 5,800, then back to 48, back to 53 or 54, and then from here on, let's be cautious if we are in that last leg of the move that can give us the levels for a pending formation presented in 2022. Let's move back into Bitcoin briefly. What occurred also, for those who are new, this is what we were looking back in January of this year. A Wyckoff distribution. The call back then, 300,000, 250, and blah, blah, blah. I don't want to be vulgar or make any fun of anybody else, but at times I'm also human, my friends. I'm only human after all. So therefore, I do have emotions, and it pisses me off when the technicals are presented in a different manner, pretending to know what's going to happen next, because even those who knew this never know what's going to happen next. That's the approach. We never know what's going to happen next. Therefore, from the highs at 105, we have the upthrust after distribution from Richard Wyckoff, suggesting that if this is indeed a distribution schematic after an upward traction, we were going to experience the first markdown from the legs, okay, from the highs to the lows. Let's play the play button and see where we are right at those lows. First test 56. The previous one for March also tested before, and now we breach the support zone from the range of 56 or 76,000 to 88. Is this range of the move now corresponding to a redistribution? That can be the case. Why? Because if this one was already respected as a distribution, we then have the argument for the first markdown, and what follows ideally within a Wyckoff schematic is redistribution. So therefore, if that's the case, we're now here on BTC, where, as you guys can observe, prices are now negating this range of the move, okay? From the 76, okay? This is a small trading range where we can observe the 2 candle closes, where Steve Nissen suggests that this give more support or strengthen the argument for a trading range, the candle closes, as well as this one. However, we are experiencing now rejection from the previous support where Bitcoin broke from the last support on March before creating a new lower low than the previous low. We mentioned before also that applying the Fibonacci or the pitchfork tool, okay, we also measure that we are going to experience a downtrend. A new trend has been formed, now testing the hard line, in this case, the medium line, with support, however, encountering resistance at the inner medium line in the green zone, where prices may still encounter some challenges before recapturing. Now, the key levels to recapture on Bitcoin remains at 81 and 83,000 region. We have a pattern in the room we're looking for, and we are paying close attention. All of this is presented within the room. So therefore, everyone, if you are interested in our work, in our analysis that has been respected over and over, I suggest to check marble6.com. We're not trying to sell you anything other than respecting the technicals from the legends of the past, as many wrong callers claim to have studied for over 20 years. I've been in this space for 10 years and I'm still learning every single day, my friends. Trading is a fascinating field that should be approached in a different manner. This is a serious business. So everyone, thank you for being here. If you are new, thank you for joining us. This is Marble6. Let's see what the price action will give us. And this is the second stream, or the follow-up from the previous stream that was presented 2 weeks ago. If you want to watch the previous stream, you can go and revisit our videos, all of them, to give us a like, or also to see what our goals were since the beginning of our journey. Everyone, thank you for being here. This is Marble6. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.